Welcome to the Boardroom. If you're joining me for this explainer, you have hit a massive milestone. This is it, the final stage of your transformation from a traditional business operator into a certified financial and tax architect. Over the course of this executive program, we've systematically torn down those outdated financial myths that keep businesses in Central Asia small, unprofitable, and frankly, structurally vulnerable. Today, we bring the whole shebang together.
So, let's take a quick look at the architectural blueprint for today. We'll kick things off with our boardroom welcome, dive into Pillar 1, which is foundation and extraction, then move into Pillar 2, supply chain discipline. After that, we'll tackle human capital economics, map out your territorial strategy, and finally, wrap it all up with your capstone validation.
All right, Section 1, welcome to the boardroom, dismantling small business myths. You are officially leaving behind those old mindsets that create deep structural vulnerabilities.
Just think about the sheer scale of the institutional knowledge you've built up. You're no longer just staring at a balance sheet hoping the numbers work out. You are now engineering compliant, enterprise-grade supply chains. You know exactly how to actively protect your corporate treasury liquidity and execute aggressive expansion strategies. And absolutely crucial here, you can do all of this while maintaining flawless compliance with the State Tax Committee and Customs Authority. I mean, these are the true capabilities of an architect.
Moving right along to Section 2. Pillar 1, Foundation and Extraction for Levels 1 and 2. Let's see how this actually builds your new fiscal reality.
Okay, so the absolute bedrock here is understanding where your business legally lives. On one side, we have the Simplified Tax Regime, or STR, and the Individual Entrepreneur Setup. Look, you know by now that these are just temporary incubators. They are definitely not permanent homes for a scalable, mature enterprise. On the flip side is the Limited Liability Company, the LLC. This is your absolute legal firewall. As an architect, you understand the critical difference between corporate revenue and personal wealth, right? And you know that an LLC is the structural safety net you absolutely need to protect that boundary.
12%. Memorize it. When you're operating an LLC, pulling cash out of the company is never just some casual ATM withdrawal. It is a highly formalized, legally binding process strictly governed by the 12% dividend tax. Honestly, mastering this one specific number is exactly what separates a chaotic, fly-by-night business owner from a deeply disciplined financial architect.
Which brings us to Section 3, Pillar 2, Supply Chain Discipline for Level 3. We're shifting gears now to the rigid, mathematical mechanics of corporate supply chains.
Now, if you take away literally nothing else from this explainer, remember this. You can no longer look at the 14% value-added tax as just a direct cost. Instead, you've got to see yourself as a tax agent, executing a very precise equation, 14% output minus 14% input. But the strategic reality goes way deeper when we start talking about imports. Listen to this. For a small entity stuck on the simplified tax regime, import VAT is just a sunk cost. It's money gone forever. But under the general tax regime, that exact same import VAT transforms into a 100% recoverable liquid asset. Boom! That shift in perspective is a total game changer for your treasury liquidity.
And that leads us straight into a massive threat lurking in your supply chain, the toxic counterparty. This is any entity that breaks your VAT offset chain. So why is this so dangerous? Well, say a supplier on the simplified regime offers you what looks like an amazing discount. You now know that without that VAT offset, that so-called discount is going to mathematically fail against VAT-registered competitors when you're bidding for serious enterprise B2B procurement. Basically, if you drop the ball on VAT discipline here, it will absolutely crush your margins. No question about it.
Okay, moving to Section 4. Pillar 3, Human Capital Economics for Level 4. We are tackling the structural unit economics hidden just beneath the surface of employee compensation.
You've seen the bottom of what we call the payroll iceberg. In traditional old-school business, managers will often negotiate a net cash-in-hand salary with a new hire. You now realize this is a lethal corporate trap. The actual cash you hand over to the employee, that's just the tip of the iceberg. The massive hidden tax liabilities lurking underneath will completely sink your unit economics if you aren't calculating them perfectly from day one.
So how do you survive the iceberg? You master the gross-up formula to mathematically separate the two massive components of payroll. First, you've got the personal income tax, or PIT, which has to be withheld directly from the employee's gross pay. Then you've got the employer's social tax, which is paid on top of the salary by the company. By understanding the split, you can calculate the true total employer cost and bake it directly into your pricing models. This is how you prevent structural bankruptcy before it even has a chance to start.
Next up, Section 5, Pillar 4, Territorial Strategy for Level 5. This is where we expand our blueprint outward and look at offshore integration.
Think about the immense fiscal power you hold in your hands here. You've expanded your vision to utilize free economic zones, specifically Fez Sugd and Fez Dungara. You know that these aren't just industrial parks, they literally function as legal internal offshores. We are talking about leveraging a staggering 0% corporate profit tax and 0% import duties. I mean, the competitive advantage you gain here is absolute. It's unreal.
But as you know, with great power comes incredible complexity. You have to navigate the territorial paradox. This is this wild legal reality where goods moving from one of these free economic zones into domestic territory, say dropping inventory into a warehouse in Dushanbe, actually trigger an international customs import event. Even though you haven't technically crossed a national border, fiscally and legally speaking, you absolutely have.
Surviving this paradox demands flawless execution. You absolutely cannot mix these inventories. Absolute 100% segregation is required. And that's exactly why we rely on Odoo's ERP's multi-company architecture. If you accidentally mix the FEZ entity with the domestic entity, you fall straight into the revocation trap. This triggers catastrophic retroactive penalties that could wipe out years of hard-earned profit. So your ERP system isn't just a piece of software, it's literally the structural steel holding your entire territorial strategy together.
Finally, Section 6, the Capstone Validation. It's time to issue the ultimate boardroom challenge.
The certification test waiting for you consists of uncompromising C-level boardroom scenarios. It's designed to verify that your fiscal logic across all 4 of these pillars is absolutely flawless. If you pass, you officially earn the title of tax architect. Keep this quote in mind. You will no longer just run a business, you will engineer its financial reality. That right there is the paradigm shift you have worked so incredibly hard to achieve.
So, I'll leave you with this final critical question. Are you ready? Are you ready to step into the Odoo ERP testing portal, prove your flawless fiscal logic against rigorous C-suite scenarios, and officially claim your place in the major leagues? The blueprint is entirely in your hands. The boardroom is waiting for you. The only question left is, what will you build?